In this video, I wanted to review another super investor by the name of Bill Ackman, and he is the founder and chairman of Pershing Square. He's a really respected super investor. He's accomplished a lot. He's famous for shorting Herbalife back in 2012 and getting into a big battle with Carl Icahn. More recently, he did invest in Netflix in 2023, and then he got out of that position a little too early. Netflix continued to drop, and then it really rose nicely. More recently, he's made a big bet on Uber. And I'm not going to include Uber in my review because the information's not public yet. It's just news stories and announcements. I'm going to draw data from a variety of sources to try to reconstruct Pershing Square's portfolio and see how the portfolio is performing year to date. This is one of the super investors, and I'm curious to see how super investors are dealing with this correction and see which ones are really beating the market in 2025. Bill Ackman, over the past year, is not making money. He's losing a little bit of money. And then over the last 3 years, the performance hasn't been all that great. To perform at 5.65 is really bad, considering that 23 and 24 were awesome years. Over the 5 year, it looks pretty decent. And over the 10 years, it looks okay. But I've seen some super investors really just crush that number, and they're up 300% as an example. So overall, Bill Ackman, last couple of years, not too great, but he is very respected, and I know he's accomplished a lot. Let's take a look at the portfolio that Bill Ackman manages and what stocks he owns in that portfolio. First one I'm going to cover, I'm actually going to go in the middle, which is Google, because that's really the biggest position that he has if you combine symbols GOOG and GOOGL. It combines to more than 17% of the portfolio's value. And that hasn't been a winner this year. Google has gone down in value in 2025. The market's really sold off that company. I think it's discounted, and I own the stock and will be holding it long term. The next stock I'll cover is Brookfield. This is a private equity company, and things haven't been very good for those types of companies. The whole peer group is really down. The market's not very good for private equity. You have higher risk, you have lots of more uncertainty, you have declining stock prices. So what those private equity companies own, that's been losing value, which means that the stocks of private equity companies are also losing value. Next stock is a little bit surprising. It's a restaurant, and I'm not really a fan of restaurant stocks. This one's doing okay, sorta, in 2025. I guess anything green is good in 2025, but this one's up just a little bit. It's a big position for him, almost 12% of the portfolio. Chipotle, another restaurant. Now, Chipotle's seen, I think, its best days in the past. I don't know if there's anything exciting about Chipotle. It is a restaurant. They lost their star CEO who went over to Starbucks. So I'm not quite sure that one's a great stock for the future. The stock has really sold off since they bought that position in 2025. That is not doing all that well. When we look at the next stock, Howard Hughes Holdings. Now this one here is a very unique investment from Bill Ackman. Not a lot of investors are in Howard Hughes, and this is predominantly a real estate company. It was the trust of the late Howard Hughes, who built a fortune in the 30s, 40s, 50s. And then when he died, this trust had lots of assets. So that's what this company is all about. Now I'll move over to Nike. Bill Ackman's making a big bet on Nike, probably betting on the new CEO and the new business plan. That may work, and this stock may really jump up in value, but I am not really sure because Nike sales have really flattened out. They have not been growing. In fact, they've been contracting a bit. As I look at the economy is not boding really well for consumer discretionary stocks like Nike. You think about the consumer, it was one thing in 2021, 2022, when consumers were getting all those stimulus checks and spending on brand new Nikes, as an example. Going forward, there's not a lot of discretionary income coming in and a lot of discretionary spending happening. So I think Nike is going to continue to struggle. We'll see how that goes. Next stock is Hilton, which is the hotel company, another real estate, hospitality, travel stock. Travel's not looking great, in my opinion. You see the airlines really restating their guidance that 2025 is going to be tough. They're seeing some drastic cutting of cost, really showing up in travel from businesses and government employees. So we'll see how travel goes, but I think it's going to be a tough road to hoe for companies that are dedicated to travel. Next one's a nice safe stock, Canadian Pacific Kansas City Railroad. And this one is up. He only has two stocks that are up. And this one here is real solid company. And interesting that this is a combination railroad, part in Canada, part in the United States. I'm not sure if the tariffs are going to mean anything to this company, but this is one of his holdings. I don't have much to say there. Railroads are pretty steady and usually are pretty stable companies. That is a surprise that Bill Ackman, who has been known for making calls that nobody else is willing to make and sometimes being correct and just completely making a lot of money. Owning a railroad is a surprise, but there it is. And then the last one is Seaport Entertainment. Real small company that I don't have a lot of comments on because I know very little of, and is just about 1% of the portfolio overall. So how has this portfolio performed in 2025? Well, I've put in all the data into a sheet. Let me show you what I found. So here's the performance of the portfolio, and we've got a lot of red and just two green spots on performance. To begin with, the two winners are Canadian uh, Pacific Kansas City Railroad. It's up a little bit, up 4%. And then QSR is up just slightly, up 1.35%. But Google hasn't been real good this year. That's probably the biggest loss, and that's the biggest position. I've also lost money on Google year to date for 2025. Brookfield's lost a substantial amount, lost $246 million just year to date. Chipotle lost $253 million year to date. So these are some pretty substantial decrements to the portfolio overall. When I aggregate everything, the portfolio for Ackman is down 7.75% year to date. Hopefully, it recovers and it performs better throughout the year. Overall, the portfolio has lost almost $1 billion. In this portfolio, the overall assets are less than 10 billion, so that's a pretty substantial amount. The S&P at the same time, it's down year to date 4.13%. So it's not like Bill Ackman's the only one that's losing money out there. My portfolio is down minus 0.89%, so I'm beating the S&P and ahead of Bill Ackman for the time being. Now, it's encouraging to see that super investors are not immune to losing money from time to time. Bill Ackman most certainly is a great investor, and I'm sure he will have years in the future that will, set records to the upside. But it also shows that he's human, and even Warren Buffett makes mistakes. He's human. And it's a matter of just continuing to get better as an investor and making more money over long periods of time. It was really interesting to see how Bill Ackman is invested. He makes bigger bets. You see that he doesn't have as many stocks as other investors might have. And we'll see how his portfolio tracks. I think the big bets with Nike, we'll see that happen next week. We have an earnings report. We'll see how that treats Nike. And we'll see how overall the economy and the stock market perform this year. So that's my review of Bill Ackman, one of the super investors, and his portfolio and overall the performance of his portfolio. I hope you found it interesting, and let me know in the comments what you think of Bill Ackman, and I'd really like to hear those comments. Thank you so much for watching. Good luck investing.